Hi guys, this is our lesson 5 and today we'll talk about why you need to understand real estate. Uh, Even if you don't plan to buy real estate, I encourage you to watch this video because it will help you not only understanding real estate but will also understanding how money work and how you can solve your money problem. So without any further detail, let's get into it. Uh, the very first thing is uh, real estate is free learning. What I mean, you can get tons of videos out there for free, and there are a lot of realtors are willing to help getting you educated for buying or selling any real estate properties. Second thing is money can buy more value. What I mean by this? Well, if you have $10,000, then you can probably buy $10,000 furniture, or you can buy $10,000, let's say, gold. But if you have $10,000, you can probably buy $100,000 real estate property. That's because you can get the $90,000 from mortgage provider. Think about this: how much stock you can buy if you have $10,000? Can you buy $100,000 stock with $10,000? That's the beauty of the real estates. Third, it's automatic appreciation. Now, when I say automatic appreciation, basically you don't need to do anything because most of the real estates are getting appreciated year over year. Uh, how many times have you heard from elderly people or from parents or from grandparents that they wish they could buy properties over here earlier, because when they in their early time those property were being sold like very cheap, and now they're very costly, about 10 times or 20 times higher than it was before. So if you buy one real estate now, it could be worth a lot more after 10 years. So think about this, and you don't need to do anything. Real estate just appreciate its value automatically. And for how much? If you buy a $100,000 property for $10,000 down, is it appreciating based on 10,000 or 100,000? It's appreciating based on 1,000. So you are appreciating the value of a property not for only your money but also for the money you've already borrowed. The fourth is it's lender friendly. What I mean by this? If you want to buy real estate, lenders are willing to help you and give you money. That's because they have a very secured collateral. It's very hard to get loans for your business. It's very hard to get loans for other commodities, but for real estates, lenders are very friendly. Now, number 5, no tax on borrowed money. Do you pay any tax if you borrow, let's say, $90,000 for purchasing a $100,000 property? No, that's because bank are in serious problem when they get a deposit from client. They are in problem because they need to pay them with interest. That's why they are helping you when you want to borrow money. And money is created when it is borrowed. That's why you do not pay any tax on your borrowed money. It can be your car loan or can be your mortgage or whatever money. If you are paying interest, IRS says no, you are not required to pay tax on your borrowed money. Instead, you get some tax deduction. Number 6, buy for less. What do I mean by this? If this is a watch, if this is a $300 watch, you need to pay $300. You cannot buy it less. But for real estate, you can. There are a lot of situations where the owner of a property cannot pay the mortgage and bank is selling in a very cheap price because they only just want to get their owed money back. Ask a realtor and they will help you understand how you can buy for less. So logically speaking, you can buy a $1,000 property, probably for $70,000. So it's $30,000 less. Why not you take this opportunity? The seventh one is very important. Someone else is paying your payment. So whatever mortgage you are taking, if you rent out this property, the tenant is basically paying your mortgage, your insurance, and then your property tax. So you are not basically paying. You purchase something and tenant is paying. So is it not something good? That's why I highlighted this one as a star. Number 8, you can avoid the liabilities. If I borrow some money, I will be personally liable for my borrowed money. But you can talk to a mortgage guy and ask for a non-recourse mortgage. A non-recourse mortgage is basically a mortgage where the real estate will be only working for a collateral. You are not personally liable. So if for any reason you cannot provide the mortgage payment or cannot provide the debt you have, then you are not personally liable. Only your real estate is collateral. Not every state support this, not every mortgage provider can help you on this, but ask for different mortgage providers and see if you can get a non-recourse loan. 9, limit liabilities. There are a lot of situations where you need to limit your personal liability. Example, you rent a home and then a tenant fall down and sue you for some reason. Then you can basically set up an LLC. Those are very common in the USA. Excuse me. And those entities are very friendly with real estate. Ask your real estate attorney how this is very friendly for limiting this liability for my real estate, and they will explain this better than I do. Number 10 is OPT, or other people time. Usually when you rent this property, you should better hire a property manager because they know management of this property better than we do. So what they do, they basically find the tenant, manage the property, fix any problem they have, and then you are basically utilizing their property. They are providing you time, so your time is safe, time is free, and you can do something else. So basically you are utilizing other people's time. Force appreciation. What I mean by this is, in addition to the automatic appreciation, if you want to do some more appreciation, you can do some very little things and appreciate the value of the properties. Example, you can paint the house, it costs a little money. You can probably install a washer and dryer and increase the rent. If it doesn't have a carport, you can basically do a carport. And here's a very interesting book by Dolph D. Ross. He is a PhD, and he says there's 101 ways to massively increase the value of your real estate without spending much money. This book is a very good one and very small book. If you are interested in learning more about this, I encourage you to read this book. And then let's talk about deductions. So all of the expenses, like you are paying your property manager, you are fixing something, all of the expenses are deductible, and you can deduct as expense and pay less tax on your income. Ask your CPA and more about this, and they will explain a list of the deductions you can do and pay almost zero tax. Number 13 is depreciations. So in real estate, depreciation is called the king of all of the deductions. Why? That's because according to IRS rule, in 27 years, residential properties are fully depreciated. What it means? Means even if your property is getting appreciated in value year over year and in time, you can deduct $3,700 on a $100,000 property. That's about so the calculation is in about 27 years, your property is getting fully depreciated. Why IRS provides you this benefit? Because they know, government cannot provide full housing for a country. That's why they are basically encouraging investors and providing some surplus or benefit, so they can basically get more motivated for helping in housing market. 14 is the tax benefits. If you have a real estate property, ask your CPA how can I get tax benefit, and they will explain you at least 100 ways you can get tax benefits from a real estate property. Number 15, you see I put a star mark, is the cash flow. Cash flow is basically after paying all of the expenses like mortgage, and then insurance, and then let's say property tax, property manager, what money you are getting, that's your cash flow. There's are lots of rental calculator out there, and you can download those free, and you can calculate your cash flow. I recommend you should have at least 10 to 15% of the cash flow, and that's what I call a good deal. So finding this deal is important, and a realtor over here can help you getting this deal for free. So talk to your realtor and ask what deal you are looking for, and then if he's a good realtor, he should be able to get you the right deal. Number 16, buy with less money. What I mean, honestly, it's possible to buy a real estate with no money from your pocket, and I did one of my property purchase with no money from my pocket. I will share this in a different video, but you can also get seller credit for managing your closing cost. So in one of my recent purchases, I purchased a property of $640,000, and I got seller credit of $22,000, and I was able to pay all of the closing cost, and I was able to make my interest rate down buying the points from the seller credit. So I didn't need to pay from my pocket, but using this seller credit, I was able to manage the closing cost and reduce my interest rate. The number 7 is it's less risky. Why I say so? Because in real estates you can purchase insurance, and when odd things happen, your insurance will cover this. So it's not risky. It's less risky than most other common investments. And last but not least, it's scalable, meaning if property manager is managing your property, CPA is helping on your tax, what you are doing, basically you are utilizing your brain, and you are sitting down over here enjoying your life, do whatever you are doing. Now, how many properties I can buy if I get such good deal? As many properties as I want. That's because lenders are here for giving me the money, realtors are over here for getting me the deal, and property managers are over here for managing the property. If I get a very good cash flow, then I can buy as many real estate as I want, and that's why I say this is scalable. So if your one real estate property is giving you, let's say for example, $300 or $400, think about this. If you can buy 20 of them, then you just don't need to go to your job and don't need to work anymore, because it's scalable, right? So in my next video, I will talk about how you can buy a real estate with no money from your pocket. If you think those videos are helping you, encourage me with whatever in YouTube, like likes or subscribe or share, and thank you so much for watching this video.